Welcome back to the Microlearning Institute. In this tutorial we look at an example from Crespo, and we're told that on the 1st of November 2012 Crespo signed a 10-year lease to acquire a leasehold warehouse for $30 million. Included in the price is the cost of a modification to create a storage facility for toxic waste products. The lease stipulates that the warehouse must be restored to its original condition at the end of the lease or on an earlier termination. It is estimated that the cost of restoration will be $20 million. Due to the warehouse's unique properties, the directors have estimated that the lease has a recoverable amount of $28 million at the 31st of October 2013. The only entry in Crespo's books, apart from the original cost, is the recognition of depreciation for the year of $3 million. Crespo uses a discount rate of 10% for any relevant calculations. Now let's look at the income statement and statement of financial position transaction extracts for this example. Firstly, we're told that we acquire the lease at a cost of $30 million. But additionally, we know that in a number of years' time we must incur additional costs of $20 million to restore the warehouse to its original condition. So as this commitment gives us rights to the future economic benefits of the warehouse, it's classified as an asset and it's recognized at its present value in the statement of financial position. And again, we're told that the discount factor is 0.386. So in addition to recognizing property, plant and equipment at cost of $30 million, we recognize an additional provision as part of the asset of $7.72 million, giving us a total recognition of $37.72. Now we must also then depreciate this for 1 year, and again we're told the useful economic life is 10 years. So here we see the reduction in the carrying amount of the asset of the depreciation of $3.77 million, and of course that depreciation being recognized in the income statement at $3.77 million. So the net carrying amount of the asset at year end is $33.96. Now, we're told that at year end, the directors deem that the recoverable amount is $28 million. So we need to recognize an impairment to the income statement on the difference between the expected carrying amount of $33.96 and the $28 million. And this $5.96 million of an impairment expense is recognized in the income statement. So consequently, the final carrying amount of the asset on the statement of financial position is $28 million. Now, additionally, the discount that was recognized on the initial recognition of the provision at the beginning of the year must now be unwound for a year. Now, we discounted the present value of the provision at 10%. So again, once we're unwinding, we unwind at 10% per annum. So there we see the unwinding of the discount being recognized as an expense, a finance expense in fact, to the income statement of $0.77 million. Thank you very much for watching this short tutorial from the Microlearning Institute.